SpaceX priced the largest IPO in history. $75 billion raised in a single share sale. And the moment the stock opened on the Nasdaq, something happened that has never happened before in all of human history. One person, one single individual, will be worth more than $1 trillion. Not a family, not a dynasty, not a generation. One person. SpaceX IPO is more than double the record set by Saudi Aramco in 2019 at a valuation of more than 95 times its revenue. Not earnings, revenue. Now, I'm not here to tell you how historic this is. I'm here to evaluate how much of Elon Musk trillion is actual real business and how much of it is the most expensive act of faith in market history. First, let's look at the scale, because your brain cannot genuinely process $1 trillion without help. Before this IPO, Forbes already had Elon Musk at roughly $780 billion. The second richest person on earth, Alphabet co-founder Larry Page, sits at around $300 billion. The gap between the richest person and the second richest person is bigger than the entire net worth of the second richest person on earth. And only one person in history, Oracle's Larry Ellison, has ever crossed $400 billion. Musk is about to triple that ceiling. $1 trillion is larger than the GDP of about 170 countries. And where exactly does that trillion live? The single biggest organ in this body is SpaceX. At the IPO valuation, Musk's stake is worth roughly $866 billion. When you stack on Tesla, his stake in X, which he bought for $44 billion in 2022, plus Neuralink, the Boring Company, and the rest of what the market now calls the Muskonomy, you clear $1.1 trillion the moment trading starts. Now, let's look at how this IPO was actually built. SpaceX sold 555 million shares at a fixed $135 each. Reuters reported that the order book attracted over $250 billion in demand, meaning that the deal was running up to 4 times oversubscribed. They literally stopped taking orders a full day early. Now, here is the unusual part. SpaceX reportedly pushed for a retail allocation of around 30%, when a typical IPO hands retail about 5 to 10%. Everyday investors alone reportedly placed over $100 billion in orders. Ordinary people were given historic access to this deal. Now, whether that's democratization or exit liquidity is a question that we will come back to. But the second part of this whole conversation is liquidity. Almost none of this $1 trillion is cash. It is marked market wealth, a share count multiplied by today's price. Elon Musk cannot sell any meaningful fraction of this without crashing the very price that makes him a trillionaire. The wealth is enormous precisely because he is not selling it. According to the prospectus and the reporting around it, SpaceX generated about $18 billion of total revenue last year and was unprofitable. Inside that, Starlink did $11.4 billion, growing 50% year on year. And the newest engine, AI compute contract with Anthropic and Alphabet that reportedly take that segment to around $26 billion of contracted annual revenue. If those deals hold, that's transformational. But when you do the valuation, if you divide 1.77 trillion market cap by last year's 18.67 billion in revenue, you're going to get a massive price to sales multiple of roughly 95x. For context, the market has spent 2 years arguing about whether Nvidia is expensive at a fraction of that. And Nvidia is wildly profitable. SpaceX is not. At 95x, you're not pricing cash flow. You're pricing a person. And there's a rational case for that. This is a man who took over Tesla in 2008 when legacy automakers were openly laughing at profitable mass market EVs and built the world's most valuable car company, basically forcing an entire industry to pivot. Jamie Dimon, who once fought Elon Musk in court, now publicly calls him the Edison of our time. So the premium is the market price for a track record of turning absurd ideas into million-dollar companies. Even the commentary this week captures the whole spectrum in one breath. Jim Cramer says he's hoping for a pop so investors hold and accumulate, while economist Robert Rage is calling the whole thing the universe's largest Ponzi scheme. Somewhere between these two takes is the truth, and every premium has the same fine print. A premium is a promise, but promises have to be kept. Now, let's flip this because there are risk factors. Concentrating this much value in one individual creates what engineers call a single point of failure. The first one is governance. Years of shareholder battles, most famously the legal war over his 2018 Tesla pay package, once valued at $56 billion. When boards orbit a founder this dominant, who actually checks the CEO? The second risk is politics. His role in the Trump administration's Dodge initiative made him the most politically polarizing businessman alive, and the market consequences were real. Tesla sales weakened across international markets in 2025 as boycotts hit the brand before his public falling out with the president. Now, they've softened the tone since, but the lesson stands. When your CEO is a political actor, your revenue line inherits his politics. The third risk that nobody is going to say out loud is he is 54, running at least 7 companies. Tesla is a bet on Elon. SpaceX, by analysts' own admission, is a bet on Elon. Even those AI compute contracts carry the caveat that the counterparties could work. There is no diversification in the Muskonomy, only correlation. So is the trillion real? Here's my own read. The wealth is real in the sense that markets cleared at these prices with record demand. $75 billion of actual cash actually changed hands to prove it. But its composition is a core of genuinely world-changing businesses wrapped in a premium that prices and promises stretching from here to Mars. And if you're tempted to chase the open one piece of market history, Meta, Alibaba, even Visa, the most celebrated debut ever, all traded below not just their first day close, but their offer price. ARM popped 25% on day one in 2023 and was back at its IPO price within a week. Now, I'm not saying that the biggest IPOs are doomed, but history says the patient investor usually gets a better price than the excited one. History's first trillionaire is not really a story about one man's bank account. It's about what modern markets now pay for, not assets, not cash flow, but conviction, concentrated in a single individual at a scale that we've never tested before. Starting today, the market is going to grade SpaceX every single trading day. I cover the numbers behind the headlines every week. If that's something you're kind of into, please subscribe and I'll see you in the next one.